$3,658, the amount that I made in just one single trade in my investor capital. So today what I'm going to do, we're going to break down it from 0 to 100 for all of you guys, and you can see how's my strategy. The strategy that I'm using is a liquidity inducement range. So I'm using liquidity inducement ranges, AMD, all important concepts, which I'm going to talk about it right now. So the first thing I'm doing, I'm always looking for the basic market structure, which I'm following the last major break of market structure to understand my price action, my market structure. And I'm starting from a daily time frame because I'm day trading. So the third thing I'm looking for is the last major break of market structure, which I can see here. I have a bearish break of market structure as my last major break of market structure. So, but the problem with this break of market structure here is it's not with the body close, it's with the weak close, because we have two types of the break of market structure: body close, weak close. So the body close is okay, it's a valid break of market structure for me, but the weak close for me, it's a pretty much trick from the institution or the market makers. So pretty much the market makers fail to hold the volume down and close the price below this low. So that's mean they want to do something, right? So, and 80 or 90% of the time, once you see break of market structure with the weak, what price gonna do? Price gonna reverse. So if you get the break of market structure down with the weak, okay, there is an 80% chance that price can go up and shift. So that's the reason I'm gonna stick to the bullish market structure in this area. Now also, if you take a look, yeah, we take out the sell side liquidity, we can go for the buy side liquidity. Now, the next step for me is I'm waiting for Asia session finish, which we are in the back testing right now. So let me just play the first hour. So I draw my Asia session here. Yeah. So now the third thing I'm doing after that I find my break of market structure. So in this case, I'm in bullish market structure. The next step is looking for the yesterday's candle high and low. I want to make sure is the high and low came from a valid POI, or they're going to be a failure swing and going to be the previous daily high or low liquidity for me. So for me, if the high or low of yesterday of the candle, high or low, didn't tap to any POI and the reaction came from nowhere, that's going to be a liquidity for me. So, or failure swing. So in this case, I can see the price open here, right? Tap to this unmitigated wick, give us a reaction. But the low, I can't see price tap to the anywhere, right? There's no support and resistance here, nothing. So in this case, this area for me, it's going to be a failure swing, okay? That's mean I'm expecting a previous daily low. So I'm expecting to price, take this low today, but respect this high, okay? For now, not for the, the last 10 years, for now, for today. So after that, so let me just mark this as my liquidity. Now, after that, what I'm doing is looking for my daily key levels. So because I'm in a bullish market structure and my yesterday candle closed bullish, so I can take the key level in my daily time frame or my high time frame POIs. So how I choose my high time frame POIs, I'm looking for the nearest POI above and below open area of today. So in this case, above this, what I have 50% of this unmitigated wick, and below, I can't choose this unmitigated wick because we are expecting to this low get taken out. So below this failure swing, we have this unmitigated wick as my key level. Now I have two sides of the key level. One of them should give me the major move of a day. One of them should be an obstacle, the main obstacle of day, and give me the retracement of the day. That is what I'm calling a daily pro key level and daily obstacle. So if I'm in a bullish market structure, for sure the bullish POI going to be a pro key level for me, and the bearish POI for me going to be obstacle. That means I'm expecting a retracement of the day from here. Okay, so if you take a look at the previous candle, price was bullish because it's closed bullish, right? So for example, price tapped somewhere in the low time from here, for example. Well, let's say we have order block here. It's just example. We can see there was nothing here that price tapped in. So, and price tap, so go up. So that's going to be daily pro key level area. Now here, price tapped to this obstacle and create a retracement of the day, right? Take a look. Open, pretty much price open, go up, come down. I think pretty much, yeah. You kind of price close right here. So priced it somewhere to create this retracement and tap somewhere to create this pretty much the pro key level. So this retracement move for me is going to be from obstacle, my daily obstacle, which is this red area. So now after that, once I found my key level, I'm looking for the range. So I'm dropping down to low time frame. So for example, in a 1 hour time frame, I think in a 4 hour time frame also, we have a beautiful range. So because I'm uh, here's the thing. I'm looking for the range that is matched with my daily pro key level. So in this case, in the 4-hour time frame, I have a strong low that is matched with the daily pro key level and a weak high here. So this is going to be my strong low and a weak high. So that's mean if you take a look, this, or also the break of market structure we talk about, was also a failure swing because this low, okay, expansion retracement failed to take this high as external liquidity, and this kind of became a failure swing, right? Price take it up. So also here, the previous day low, if you take a look, price go up, failed to take this area, so this is going to be a failure swing. So that's we can expect to price tap to here, give us a retracement move, take this and go up, right? So now what I'm going to do, pretty much, I'm going to wait. So in this case, I can't do anything unless if I want to do scalp. But if I want to do day trade, I'm waiting for price tap one of my key levels. So I'm setting one alarm here, and I just set and forget, right? I just go and enjoy my day. So in this case, I'm waiting. So yeah, the London session starts. Price tap to my daily obstacle. Now, what I told you, from here, I'm expecting to price create more liquidity here. Price is creating more liquidity. If price failed to take this out, see, again, this low failed to take this high. Price created a tree candle confirmation here. The tree candle confirmation, it's the QM formation in low time frame. So that's mean also this is going to be a failure swing. Equal low we have here. Trend line liquidity. All things line up to make this area as strong as possible. Okay? Now, so price tap to here. What I'm going to do, I'm going to look for confirmation entry. So how am I look for confirmation entry? In the 5-minute time frame, what I'm looking for is stop hunt and a break of market structure and let's say internal liquidity or a liquidity between these strong high and a weak low that I have. So for now, I have the strong high here. And for the weak low, let's wait to see. Yes, that was a little bit fast, my bad. So yeah, also for the weak low, if you take a look, stop hunt, two-side QM formation. So this is going to confirm my bearish range. Okay, now this is my liquidity area, which I call this internal or liquidity. Okay, now this is my range. This is my bearish range. I have the internal. After internal, I can expect that external get taken up. So what I'm going to do, I drop down to high time frame to look for the nearest POI above this area. So pretty much, I like to go to 30-minute time frame to look for the nearest POI in this area. So which, let's check the 15-minute time frame. We have a pretty much support and resistance here, which line up with this order block. What about this area? Yeah, we have the support and resistance on mitigated wick. So what we can do, I really like to take this whole order block and refine it in the low time frame. So that's mean if I like to take this and I start to refine it above this, and I have this hidden base. Now take a look because we're gonna be realistic, right? We have something called a spread in the market. It doesn't matter if you trade on your icon or prop frame. We have something called a spread. And especially if you enter in the low time frames, you should be aware from the spread. So I personally, what I'm doing, I enter on the liquidity once my liquidity distance and the POI that I choose is less than 3 pip. So here this is I think 0.5 pip. And I put my stop loss always above the strong high. So this is going to be my entry. So even if price didn't tap to this area, so even let's be realistic. So price even tapped to this area, if my entry was here because of the spread, maybe I'm not going to get in. So I put a little bit my trigger down on the liquidity. Now stop loss above the strong high. This is going to be my target. But I personally, in my strategy, I'm looking for forced reward. So that reason I make 3.6k. Okay. So, but here what we are expecting overall for today is price take this failure swing, if you remember. So we're just going to set what time is it. The time for us so important. So pretty much is NY kill zone. My time is the UK time zone. So it's 12 is NY kill zone, 1 hour before the NY session open. So that's a great time to enter trade. So price tapped in. We're just going to wait. Now price take out the internal. After internal went and go take out the external liquidity. So in this case, what I'm going to do, I'm break even. I'm going to move my high my stop loss above the swing high. Yeah, maybe going to be a 2 pip stop loss, like $200, $300 stop loss here for me, but I'm just protecting, because if price want to retrace, if I put my stop loss here, you know, if I go break even here because of the spread, even if price come here didn't tap to the break even, okay, maybe I'm going to get taken out, right? So that's the reason I take a little bit loss from the break even in this side here, okay, so I can get called. But I do this after I get the break of market structure in the external liquidity, not at the first. So now I can also maximize my entry. So how can I maximize my entry? Pretty much we can wait. And I want to understand where this retracement come from, because every reaction in the market, okay, action, reaction, okay, it's some formula of physics, right? So every action come from a reaction. So if price create an order block here, you're going to get the reaction. So now that's mean, in a simple language, that means even if you get the retracement here, this retracement came from a POI, okay, from somewhere, right? So we should understand where is it, because right now we are expecting that this low get taken out. Every bullish POI here for us just going to be a distraction. That's mean obstacle. So if you take a look in the 30-minute time frame, we have a huge order block here, which I'm going to call this obstacle, right? I'm going to drop down to the 5-minute time frame. Oh, that was too fast. My bad. Sorry. So yeah, now price tap to this obstacle. I can expect a price create retracement here and come down. So now in this case, what I'm going to do, I'm going to mark my nearest liquidity that I have. So this is the nearest liquidity that I have to price take it out. And also this is the strong high that I have as my next range to play and a stack on it. So pretty much we're going to look for trade above the 50%, above this liquidity. Now I'm going to drop down to a higher time frame to look for the nearest POI above here, which what I have, it's this open area order block here. I hope you guys see it. I'm going to drop down to 15-minute time frame. It's the same area. Let me just make this like, yeah. So if I want to enter, also I can refine this area. Let's go to the 15 minutes and refine it. So in the 15 minutes, we have the order block. No need to refinement because we have a huge order block there. Now here, if you want to refine it, what do we have? Take a look. We have a fair value gap right here. So that also line up with the order block here. So yeah, we can go with this area. So I think that's enough. 6.3. Yeah, it's good. It's a good refinement. So also we can go with this target as a last target. But if price take this low out, we are going to go break even. So, yep, let me make the targets here. So this is my A setup, A plus setup, my bad. This is my B setup because this is going to be stack and scalp. So I'm risking 1% in these type of the setup. And if I want to take these setup, I'm going to risk 0.5%, right? So let's see what's going to be happen. See, my stop loss is here. My break even is here. Price even didn't tap to your break even. Just take a look. Just take a look. This is what I'm talking about. See, price didn't tap to your break even, but start to fall down. So if you put your stop loss here because of the spread, you're going to go break even. And you're going to start to cry, ah, shit, man. In a trading view, I didn't get tapped. But in an MT4, MT5, my broker stop, I did get tapped. Why? Because you should be smart, okay? Spread is like I can say, it's like a virus, right? Spread like a virus. You should avoid it. You should be smart and avoid it, right? That's it. So anyway, who cares? So we entered here. Now we're gonna wait. We're gonna wait. What time is it? Cool. 2. Awesome. Done. This get taken out. If this get taken out, you're going to go break even. Again, you can move the high here, but if you want to protect the risk, also you can go here. It's depend on your risk management. I can teach you guys how you should do with the risk management, how you should manage your position. Maybe some of you guys trade with the 100K. Maybe some of you guys may trade with, I don't know, 10K. So the risk management and the personality here is different, right? But what I'm trying to do, just show you guys how you can design by your own, okay? So I personally, I'm just moving above. It's my B setup, I'm just moving here because it's B setup. I moved the profit in A plus setup, so I'm just protecting to don't get lost. And yeah, done. Price tapped it and price take out the filler swing. right? So that's it, easy peasy, we're done. How much we made here? So if you risk 1% here, so this is going to be, it's not 15 risk to reward, it's going to be about 5, let's say. So you made 5% here. And how much did you make here? Was, let's say, 2% here. So in a total, you made 7%. That's it. Now, if your FTM of phase 1 is 8%, now you need just 1% to just finish it. That's it. This is what happened once you follow the liquidity. You put all the important main concept in the market together. Okay? Not just fucking ICT, not just fucking smart money. You put all the main concept together and have a clean strategy and entry exit. So, and yeah, let's see what's going to be happening from the daily pro key level. Price tap to the daily pro key level, give us some reaction. It's 4 p.m. Yes, we can look for confirmation entry here, but in the 5-minute time frame, I have a stop hunt, break off market structure, but I don't have any liquidity. So once I don't have any liquidity in my confirmation, I'm not going to enter because it's going to be so risky. Take a look, just creating a liquidity here. Maybe price going to take this low here. Yeah, that's it. Market done. Yeah. Let's go to 50-minute time frame. So what's going to be happening tomorrow? Yeah, one small liquidity swept. Here we go. Done. See, this was all fake. And by the way, these key level are just valid on that day. The next day, these key level are not valid. You should look for a new key level. So this is how my strategy works. It's fresh data. So see, this was just a. So that reason I didn't enter here a confirmation entry because I didn't have any liquidity in the 5-minute, and this was just a liquidity creation. So that's it. Hope you like it. If you pretty much like more videos, just subscribe my channel, and if you have any question, just put it on the comment and I'm going to answer it for you. And don't forget to follow my Instagram page. I'm going to put all details in the description. And yeah, cheers. See you all.